It's a pleasure to welcome you all once again to the third day of the world's largest fintech fest, the Global Fintech Fest, organized by Payments Council of India and Fintech Convergence Council of Internet and Mobile Association of India and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India, and Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. We would like to thank our Power by partner, Razorpay, brought to you by partners Amazon Pay and WhatsApp Pay, in association with partners Google Play, in association with partner Open Financial Technologies and digital payments partner Cashfree Payments. This session is powered by Refinitiv. The second edition of the summit with the theme FinTech Empowering a Global Digital Economy will provide an in-depth understanding of the latest businesses, policy, investment, and technology developments within the fintech landscape globally. We welcome you all to the panel discussion on technology for sustainable wealth management. Without further ado, we are pleased to welcome Mr. Ranjit Pawar, the Sales Director, South Asia, Refinitiv, who will be moderating today's discussion. Please welcome our esteemed set of speakers, Dr. Mohit Batra, the Chief Executive Officer and Founder, MarketsMojo.com, Mr. Narayan Gangadhar, the CEO, Angel One Limited, and Mr. Atul Shinghal, the founder and CEO, Scripbox. Dear delegates, please keep on posting your questions in the chat box and the Q&A section. The panel will pick up a few in the end and answer to your queries. Over to you, Mr. Pawar.
Thank you, Swati, and a very good afternoon to everyone. A very warm welcome. I'm Ranjit Pawar. I head sales for Refinitiv in the South Asia region. I'll be a moderator for today's session. The session, as you may have already seen, hopes to discover how technology is enabling sustainability of business models in today's wealth sector of India. The Sensex crossing 60,000 points, Nifty inching towards 18,000, and retail participation like never before. I think they all serve as an interesting background to our discussion today, because these events have brought up many questions in the minds of investors and market participants. But I think one important question that is there in everybody's mind is whether the market can sustain so many players in the wealth industry. And if yes, then what are these businesses doing differently to achieve sustainable growth? So with that context, let's kick off today's session. Swati has already introduced our guests. We are honored to have Mr. Narayan Gangadhar, who is the CEO of Angel One, Dr. Mohit Batra, who is the CEO and founder of Markets Mojo, and Mr. Atul Shinghal, who is the CEO of Scripbox. So a big hi and welcome to all our speakers who have joined us in this virtual session. Interestingly, all three of them are innovating in different yet interconnected business models. And I'm sure that the audience will get some interesting insights and information from today's session. So, Mr. Narayan, let me start with you first. You have an impressive track record as a technology leader with big brands on your profile such as Amazon, Google, and Uber. Does your shift to Angel One, as it is called now, signify that the wealth industry is transforming into a technology arena rather than a pure financial services domain? Would you like to give us a little bit of insight, on your own career decisions and path, and then maybe we can move to the topics questions.
Yeah, well, welcome everyone, and thank you, Ranjit, for hosting us on this panel. So very happy to be here. So, you ask a very interesting question, right? If you look at the past decade, the technology has really moved from being just a key enabler to being a key driver of growth. And this has been especially true in the fintech industry. And this trend has been observed through a lot of pivots which have happened over the past, couple of decades. And many of those are very well known and well recorded. And a company like Angel, we have been at the forefront of driving this change. So if you look at all our core businesses, right from acquisitions from acquiring a customer to transacting with a customer to servicing a customer to providing them better value-added features and services, almost all the delivery is happening through our products and services, and they are all powered by our tech platform. All our acquisitions happen online, all trades happen online, all customer queries, all customer inquiries, every single thing, the way we service our customer, the way we nurture the customer, every single thing is happening online. So Angel is a fully digital and a fully tech enabled company right from day one. It's been that way now for many years. Now, if you look at the core bedrock, the foundation of all these processes, that really is our technology stack, which includes our cloud services, which power many millions of orders every single day, which run across multiple data centers all across India. So there is an extremely high level of service and reliability and so on, which we offer to all our customers. Then we have our platform services, in which we code up and execute hundreds and thousands of business processes, which are fully automated and delivered just in time. You know. Then we also have at the next layer up, we also have our data science stack, which includes sophisticated machine learning models by which we offer our differentiated services like our robo advisory service, which many of you are familiar with. And we also continue to leverage a lot of data science across all the aspects of our customer, across all the aspects of our customer stack. So, to be honest with you, this shift to Angel, for me, it's been a very natural transition. It's been from, moving into a very rapidly growing technology company that is in a fascinating domain. Now, if you look at it broadly, I would say, yeah, if that signifies a trend, absolutely. I think the wealth management industry was well underway in its transformational journey through technology, and I just think it's going to get only better from here on out.
Sure. Thanks, Narayan. So we can probably, assume that yes, it is very soon kind of going to become a tech-driven space or tech-led space. Probably it already is. Thanks for that. I'll come back to you with some more interesting questions. But let me go to Mohit. Mohit, thanks for joining us today. My question to you is that before founding Markets Mojo, you worked with Motilal Oswal, ABN AMRO, Alchemy Capital, all of these places in leadership positions. And not to forget that, you were a founding member and also the CEO of moneycontrol.com. So what made you go back to, again, founding an information and research business instead of probably floating something more traditional like a broking platform or a wealth advisory firm?
Thanks a lot, Sanjit. Thanks a lot for such an esteemed panel, which is, people that we respect a lot. Narayan, Atul, thanks a lot for being there. Now, see, the hypothesis of us starting Markets Mojo has been very simple and straightforward. I remember when I was passing out from my college way back in '95, my fair assumption of taking finance as a domain was that we have equity concentration of close to 3% in this country. If you go to around 9-odd%, we would be Korea. If you go to 15-20%, we would be China. And if you go to, say, a 40%, we would become US. So the prospects looked amazingly well at that point in time. But if you look at, almost 28, 30 years hence, we're still kind of rounding in there at around 4%. Right. So now if you look at a market like Indian equity markets where you have a consistent growth story, even if you look at last 5 years, you've got a 14% CAGR equity market delivery. But having said that, the retail participation doesn't come in that effectively. Right. Initially, our markets were more institutional driven. Now there is obviously in the last 1 year, there's a lot of equity participation that is coming in. So our assumption was fairly simple: is that the retail essentially doesn't make the kind of money that the institutions ideally would make being in the institutional space and getting access to the data points and the research that they are available with. And B, they are not educated enough to understand the various asset class and how to do a fair amount of asset allocation to generate maybe a double-digit post-tax kind of a return. These were fairly two simple assumptions. The third assumption was that, if you look at the Indian markets, you have around close to around 4,000 odd listed stocks, actively traded around 1,800, and you have, the biggest of the sell side brokers to research on around, say, 150, 200 odd stocks. Everybody is doing the same set of research. And there is a stagnancy of this research falling from the institutional desk to the HNI desk to the retail desk. So there's a lot of understanding you get when you deal with the hardcore broking industry. So our objective was twofold. One was, can we have a platform which is truly a retail growth platform rather than for institutions? So we created Markets Mojo as an authentic, unbiased retail advisory platform. And B, we created a platform where through data intelligence and data science, we can research all 4,000 listed companies. So that is something that is our unique IP. I'm happy to share that 6 months back, we launched across 20 countries. So we are now covering 60% of the global market cap on research. And we have research not just on the Indian market holistically, but even US, Canada, Mexico, and various other economies, where we run a success rate of over 80% on our calls. And we run model portfolios, we run stock research, research reports which are fully automated and real time for investors. So there's a lot of work that we are doing trying to get the retail participation. Our focus is very simple: educate, train them, and then make them understand the value of making money first rather than saving money by going to platforms just for the sake of lower cost. So we are on the making money side, and I think that there is a lot of intelligence already on the saving money side towards various platforms. So that's been our theme right from day one.
Right. Thank you. Thanks, Mohit. I think that must have been very useful for our audience to know as well. And I've seen your website, and I must say it's pretty unique, especially features like the portfolio generator. I think they are making your site even more popular. So thanks, for leading that whole journey for many of our investors in the market. Atul, if I may come to you, you again, have an impressive academic background. You're an engineer from IIT Madras. You have a degree from IIM Bangalore. So what inspired you to walk away from the relatively easier path of a corporate career and instead, set up Scripbox? It's a platform that I understand helps customers, make informed decisions on the market. What was your inspiration for that?
Thanks, Ranjit. Thanks for having me on the panel. And obviously, it's humbling to meet people like Mohit, who started Money Control, and Narayan with his tech background. So I'm one of those classically overeducated, underpaid guys who's actually an accidental entrepreneur. I was in corporate life for 15 years. And during that, the last stint was actually setting up an AMC, or intending to set up an AMC in 2008 for a group called Old Mutual from South Africa. And that actually gave me an insider's view. Unfortunately, because of Lehman Brothers, we never went through with the application. We were also setting up a wealth tech or a wealth management platform similar to Scandia for the group which was there in the UK and in South Africa. We were bringing that to India. And to cut a long story short, that showed me that there was a large opportunity in India to bring simplicity, transparency, ease of use, the power of digital to the category, right? And digital is not about being online. I think people confuse online and digital. Online is just a channel. Digital is science, maths, data, applying all of that together to give customers better outcomes. And Scriptbox actually is basically taking the traditional wealth management category, breaking it into bite-sized chunks and providing that sort of your robo-advisor in its true sense. So we've got algorithms and tools to understand the customer's needs, whether they want to retire, whether they want to take their children to college, whether it's India or abroad. Once you understand the customer, you create a portfolio, and people like Mohit obviously understand this, unbiased AI, algorithm-driven fund selection. So there is no touch in that. Once you do that, you execute, and that's the online part, right? You help people buy and sell. But again, all of our views are long-term, right? We are not a trading platform. We are not a transaction platform. And obviously, we review this on a quarterly basis, right? Because the role of the wealth advisor is not to help you buy and sell, but to be by your side to meet your life goal. So we see ourselves as a classical robo-advisor, bringing the power of digital to the entire stack of wealth management. And unlike, we do this at the family wealth level. What I mean is that in India, wealth is a family matter. So as I always say, there's a Maruti ad which says, "Kitna deti hai?" We don't answer that question. that we leave it to the fund manager. It will take you to the right place. So in our car ad, we'll not tell you the mileage. In our car ad, we'll take you to your destination. That's the difference we have in terms of what we do at our place.
Thanks, Atul. Very nicely put. Thanks for that background. So with that, if I may just jump into some of the questions again pertinent to today's session. As Refinitiv, as a market data solutions provider in the market, globally, we are present in all the leading countries, economies. We continue to kind of gather feedback from our customers, but also from our customers' customers. So the end users, of our data very often happen to be our customers, customers. So one such report that we recently did on the wealth front, it's called the Race for Digital Differentiation. It's something that you can download off our website. It showed that 29% of millennials are ready to switch platforms, ready to switch the wealth or broking platforms that they're using. This is compared to only 10% of investors who don't belong to the millennial generation. So it does tell us something about how easily today users are ready to switch loyalties between platforms. Now, this report has taken surveys across 9 global financial centers, including some of the key financial centers in Asia as well. So I can assume safely that for India, it should not be very different from an end user perspective. So Narayan, if I may ask you, how are firms like such as Angel One planning to not just grab the attention of this new breed of customers, but also retain them?
Yeah. So, what if you look at most of our customers, right, more than 30% of our customers are in the millennials category. And we are very strong when it comes to acquiring these new customers and nurturing them through their journey. And, the trend is really inevitable. If you look at retail participation, it has now increased across all income segments and across all age groups today in India. We have more than 60 million Demat accounts and over 2.5 million SIPs which are registered. So when you look at these new age customers who are coming online, right, what they are really looking for is that they're looking for a easy to use investment vehicle with a lower ticket size. But historically, wealth management services have catered only to customers who have higher levels of liquidity, higher levels of investable net worth. So these robo systems are really the way to go. And this is where what we see is that a trend where passive funds are growing very rapidly and they are emerging as a very healthy alternative to traditional active wealth management systems. Now, if you look at at a macro level, what we are also seeing here is that with more millennials coming online to our platform, we have invested very heavily in content, to build awareness, building information that is easy to consume, that is easy to, to help them in their journey as they mature in their, from the lower target profile to the next gen up, right? What we see is that both the content and the journey optimizations for the Gen Zs is a very fundamental and a core part of our product offering. So our product journeys, they are very different. They are very different. They are based on your personas, which guide you in your user flows. And to me, this is a trend that is only going to continue, because I think a recent Refinitiv report itself has shown that more than 30% of the millennials are ready to switch, right? That's what you quoted earlier. But what we have taken and what we see is we acknowledge that. And given that we are extremely dominant in that category, we are building our product journeys and our content experiences to be aligned with that. And this is going to take shape with even better data science algorithms as we are continuing to build, to understand their intent, to understand their preferences, to understand their social awareness, to understand what kind of learning parameters are influencing them. And that cohesive journey is what Angel's offering is to this customer base. And that's how we see ourselves differentiating and frankly, even delivering better value to this customer base over a longer period of time.
Right. Thanks, Narayan.
And
Atul, I think you want to add something on the
yeah, so
millennial?
I mean, this is music to our ears, right? And I don't think the answer is about switching from platforms. I think the answer is switching from offline experiences. So we see our customer base increasingly coming from people who are getting clunky, sort of really broken experiences from their brokers, from offline more than online. I mean, we are very proud of the fact that our NPS is 60, and I think that's probably number one in the world. And I don't say this lightly, right? Our customer retention rates are 95% cohort wise for the last 8 years, 9 years. So yeah, we feel comfortable that this is music to our ears, that our millennials are happy to switch because yes, we did start with early savers as our core proposition. And like you were saying, get people started, stop thinking, start investing was our byline. But now as our customers have grown with us, we matured our product to actually offer a full stack wealth management solution. And I think our target customers are increasingly people who already have a relationship, who already have experienced markets, are now looking for something better, right? And we are that better. Sorry, I don't want to be a sales pitch, but to your point, we believe digital is the future. We are still very small, all of us put together in the digital world as compared to the offline world. And customers will switch from offline experiences to better digital experiences, where costs are lower, there's transparency, there is no information asymmetry, because education and content is very important to your point. So all of that becomes available on a digital platform increasingly, especially somebody who will be long-term with your wealth.
Sure. Thanks, Atul, and thanks for providing me a segue into actually my question to Mohit now. Because the same report, also says that 72% of the investors who were surveyed, they claim that better integration of key news updates, is an important area for improvement by platforms. Now, I know that in India, we all assume that, news is available just about everywhere today. But do you think that there's still a certain gap in what, your end customers, would like to see in terms of both news? And I think when we say news, we're also talking about research, we're talking about market data. So do you see any specific gaps that, has come back to you as feedback from probably your end users?
Yeah, so I think there is a big gap, if you were to ask me, and it's fair to say there's a big gap, but it's also not to undermine because there's a lot of research that's already available in this country. There is a lot of good work that everybody in the industry is doing. What we are observing though is that there are two aspects in which I see this. One is the interpretation of this particular research. See, what typically happens is that if you go to the advent of research, it is more consumed by institutions. Now, you put the same institutional research, pass it on to the retail guy, and you expect him to understand the balance sheets and the P&Ls and the growth stories and all that stuff. That doesn't happen, right? So one way of saying is that I have the research report, here is your 20-pager, and now you go and sit and understand, which sometimes, people like us also would take a lot of time to even look at it and try and make anything out of it. So I would say that the key term out there is interpretation of data, which is, now to just give you an example, you see L&T picks up an order of 5,000 crores. Now you may be bullish on L&T, you may try and buy that stock, but you don't know what margins has L&T picked up that stock, whether it's going to take its overall operating margins down, up. So you don't know the interpretation of anything that comes out. So what we've been trying to do is try and interpret the whole research points, right from news, from financials, from technicals, from corporate actions, all of that together into a very simplistic way of saying that whether what you should do with this particular opportunity. And that to me, just to tell you that at any given point of time, we are evaluating close to 60 million data points on a daily basis, just for India. I'm not even talking about the other 20 countries where we are like that. So that has been a very, very tough, system to provide. But if you see, that is only one part of it. According to me, the second part of it is what is key to success. Because as we say that, it's not what is there in your portfolio or what makes your portfolio, it is what makes you. And that is where the challenge is coming, where, I personally do one webinar a day with my customers. And we have around tens of thousands of customers who join that webinar. Most of these guys are the millennials. Most of these guys are guys who've come in the last 1 year and all this stuff. And they don't understand the market. They want to come in with a very strong expectation. They've come because they've seen a very strong growth over the last 1 to 2 years. And I get really scared because, with a 10, with a million, 1.5 million new additional investors coming on a monthly basis with very high expectation, I think the retail participation has a fear that I personally feel there's a fear that it may just go down after some time because the expectations will not be met. So that takes me to the second point, which is making them understand the softer aspects of it, making them understand the qualities and the virtues of having patience in the market, discipline to follow the advice, read a bit, right? Do not go for any tips in the market. Make sure that you're researching what you're buying. So that to me is much more bigger challenge than challenges that because we are all industry people, we're trying to resolve this particular challenge, trying to keep them in the market. Otherwise, we'll have the same story. We go from 3 to 6%, come back to 3%, because it'll keep happening like that. And
Right.
that is the reason we don't do trading calls. We don't tell them to do anything on technicals. We tell them you are in, you dip your feet in, make a little money, be confident, and then go in. And having said that, the whole market is typically goes the other way around, and that's one of the reasons that we've kept ourselves away from transactions. Right, kept ourselves away from the bias of making money on both sides of the trades. So we basically say that this is, we've priced ourselves as a fixed subscription package. We'll give you everything. We are there. But I think the second part, which is more human in nature, to try and give them the attributes of successful investor, what they do, what they need to do with their portfolio. And if you see any of the webinars that I personally do, I think 90% of the questions are not about stocks.
Right.
It's about what should I do. I have this what should I do. So it's more about becoming more a motivational speaker rather than a market specialist.
I want to add something to that actually, and Mohit made some extremely insightful points there, and our observations are also very similar, because we have started venturing into areas where we've realized that customers are coming to us with a certain end objective in mind, whether it is wealth management, whether it is better understanding of their financial portfolios and how they want to grow and meet certain objectives. So we have introduced subscription-based services also, like
Right.
our Prime, which we have incorporated a lot of ideas in it, like better strike selection, faster entry exits, better position size, better position sizing, and smarter order types. So what we've done is, using all these cohesive Greeks and technologies that go behind the instrument, we have abstracted all that away from the customer.
Yeah.
And the customer now ends up with a suite of services which is adjusted to the market risk, to a sectoral risk, but very importantly, your behavioral aptitude on what you want to buy. And that service is something that we are seeing a lot of traction on as well. So I just wanted to add something to.
No, it's a beautiful platform, Narayan. I've seen that. It's a beautiful platform. And I'm not saying this because we're on the panel, but I'm still trying to get the simplicity of Atul's platform in, which I'm failing every day.
So, I mean, we've taken a slightly different angle to the news. We call it news that matters, right? So what we say is, how does this impact you, right? So example is Franklin Templeton, right? We are very risk averse in our portfolio creation. So in our curated portfolio for debt, we didn't have any, they didn't meet our risk criteria. They did our performance criteria probably. So when we published that, we told people what happened. This is what happened. This is the reason. This is the impact on the market, but no impact on you. So that confirmation, I mean, to Mohit's point, people want to know, mera kya hua? What happened to me, right? Yeah, market is going up 60,000, 70,000, but what about me? So personalizing the news is actually most important, Ranjit, in our view, and that's how we try to curate the news and serve it to you in bite-sized chunks. Otherwise, in a sense, there's too much research. I mean, like Mohit said, you get bombarded with all these pink papers and all this. So just keeping it simple is important for the customer.
Right. No, that's very, very valid, and again, very valid points from everyone on that. Just one thought that comes to my mind, from what all three of you described just now. You have great platforms, and there's a lot of AI, there's a lot of algos at the back of it, which is providing all of this information, insights to your end users. Do you think in India the end user has now really matured to move away from needing a human interface, a human face to advise them, and moving now quickly or swiftly towards a non-human interface? It may not be that the entire journey maybe digital as of yet, but But do you think that shift is happening or has already happened?
So I'll take that to begin with. I think it's a journey, like you said. I don't think it's an overnight switch. We also learned it. We started a pure digital platform. Over the course of the last few quarters, we've added human touch, especially for customers who need it. So it's a psychographic need. But we call it a chai pe charcha, right? All the portfolio construction, all the education, all the content is centralized. So we do not, the hero is still the product, hero is still the portfolio, hero is still the journey of the customer. But some people need that hand holding, right? India is not a DIY market. India is still a DIFM, do it for me market. So if you look at all the high growth companies like Urban Clap, etc., there is somebody doing the work for you, right? Compared to an IKEA, there's one carpenter coming home. So similarly, we believe in this wealth journey, people will migrate increasingly to the digital platform. It is a better experience, but they want that comfort, right? What should I do, right? Like Mohit said, that is this right for me? That answer is important, and I believe it's a journey. As you digitize that experience, make it more personalized, and make it easier, customers will migrate over the next 5 to 7 years. But I think the human interface will continue to play a relevant role for some time. And you have to balance the right. You have to keep bringing your costs down, making the process more scalable, the experience more uniform. But that final 5% human touch, that emotional management, I think systems will take some time to play there. So yeah, we try to give the best of both worlds. Good science supported by good people, as we call it.
Right. Now, just building on that, I'll go to Mohit, because Mohit, you spoke about your webinars. You mentioned that you feel like a motivational speaker because people just want to, hear more beyond, just which stock should they buy or sell. So going back to this question of, human interface, doesn't it kind of create a bit of a paradox where people want, someone very knowledgeable, insightful to come onto a screen and actually give them advice, whereas the effort of the industry from a scalability perspective, and going back to our question on, how do we make our businesses sustainable, is to make the journey more and more, digital and self-service oriented. So how do you think that balance, is going to be struck?
Yeah, I think it's a very difficult question, Ranjit, to be very frank. I'm struggling with the answer to this because if you, being absolutely truthful, I think the human need of advisory, touch and feel, I think it's going to be there for a long time to come. Now, there are certain things that you can automate. There are certain things that you cannot automate. The whole advisory piece that we've got obviously is automated. We are today, automating that across countries now. But having said that, that need to talk to somebody, that need to have a discussion around whether this is the right thing to do, I think that is something that would be required over a period of time. I think there are, if you were to take the example of internet banking, this is not akin internet banking. This is not saying that I have certain funds, I'm moving it, I'm redeeming it, I'm doing this and I'm transferring to somebody. There is an advisory piece that comes in. And I think it will take us maybe another 10, 15 years for advisory to be automated and people to trust that advisory. One of the main factors being your performance. If the performance keeps coming in, then I think a little bit of discipline keeps coming in. But I think we are in a world where I would say that we'll have to live connected with the whole human advisory role. Now, whether you categorize it as an HNI role, whether you categorize that as a broader forums of addressal like webinars, whether you talk about it as more technology-driven communication, which is individualized to people of what they do. So those touch points have to be maintained. There are certain things that technology can do. I think the need of a human touch point is something that will always be there in the advisory field. We'll have to just say how we, because I'm saying this because I had taken a vow that I will not do anything physical. Right? I today run 60% of the global market cap on research with a team of 30 people, including the 2 promoters and the peons. So that's what we do. But today I'm admitting in an open forum that I think that that is good to have a full advisory model in place. But if you want to scale up, then I think you need there is a clear need of human intervention somewhere.
Right. And sorry, you want to add to that?
Yeah, I wanted to just add that what we are seeing is we look at it as a continuum. There is a full continuum of people that are coming onto the market, and out of this 90th percentile, we are building now for the 95th percentile, which is for that last customer, most of whom are in tier 2, tier 3 cities, who may not be really familiar with how to
Yeah.
actually onboard on a full digital experience. So at Angel, what we've done is we have taken a balanced strategy. Every single thing, as most of we are India's largest, we still have actually one of India's largest B2B broking platforms. And everything that is serviced for the customer, every single thing has gone digital. But still, there are one or two of these outlier cases for the last mile where we have to invest in technology, complement it by pairing up with the right set of human processes to scale the system, because that ultimately builds that trust value. And we are one of the few brokers that do that very well at scale. We offer a fully integrated package so that we don't leave out that last person from a we cover 97.4% of all zip codes in India, just to give some context, right? And we have 10,000 sub brokers, more than that actually. So there is always going to be that last mile customer who's going to need that handholding. And obviously we're making life simpler for them by investing in better AI and ML, better face recognition, better Aadhaar recognition, like simple things. But at the end, the last juice always comes with a human touch, which is required. So I kind of agree with what Mohit said there. So it's a nice balance between the two.
Right. No, I agree, with the points you made, and I think in a very hyper-personalized world that we are living in, I think there is still, the need felt, especially by the segments that you mentioned, coming from tier 2, tier 3 cities, to have, a human interface. Probably they are investing for the first time. A lot of them are probably, entered only in the last 1 year or 2 years, as Mohit mentioned. So certainly there is, still that need felt. Uh, I know we are reaching towards the close, of our session in terms of time. So maybe time for just one question. Again, aligned with the Q&A that I can see in the box. Where do you see this space heading towards? Amazon's, made investments recently into companies like Small Case. At the same time, I'm sure the larger financial institutions, banking institutions, for example, AMCs, they're also eyeing this space that all of you are building up. Where do you see it kind of headed? The big finance guys coming in, or do you see it's going to be the big tech giants, who are going to kind of occupy and consolidate this space over a period of time?
So my view is that the fund houses, their role is money management. Their role is fund managers, right? Their job is to, kitna deti hai, wala the question I was saying. Their job is to provide returns. The job of the wealth manager is to provide the journey, right? And I think they are fundamentally different processes. You really have to approach them with deep domain expertise. Secondly, this is a huge market growing at a breakneck pace in terms of overall financialization of assets. We are still under-penetrated. So I think there's enough headroom for everybody to play. Nobody knows what the future holds, but even the most advanced global markets are highly fragmented. Even a Charles Schwab or a T. Rowe, 3%, 5% market share. So I think there's enough headroom to grow for everybody. I think the winning strategy is going to be deep domain expertise with great digital experiences and staying power. And I think to your answer about Amazon and Google, etc., I think it's going to be good if they come in and provide the right technology. But it will require staying power. It will require a combination of probably all three businesses put together to continue to win. Right? The great research which Mohit provides, the great broking experiences Narayan provides, and the overall wealth stack we provide. I think somewhere the answer lies somewhere in that. That could be a consolidation play that like-minded people get together to create a behemoth which the market needs.
Right. Now, thanks for that, Atul. Mohit, Narayan, any thoughts on that quickly?
Yeah.
Well, I think the names that you're taking, I think the transactional space will get completely revolutionized because that is the play with which the large players come in because of the sheer network and the spread that they've got. And that is the reason that we humbly stayed out. We said that we're too small to get in at this part into this game because there's enough and very smart platforms available. Now, I've been observing Angel for 15 years now. I think the way that, and I met Mr. Thakkar in his first office in Bandra, and from there I've seen his journey to what has been created today. And the fastest, I think, and the most innovative company on the broking side, the way they grow. But so there is this transactional piece which is the most challenging piece. Where people will come and disrupt. I personally believe that you should only stand for something that you can do the best, and then let the people come in, because that's at least gives you a chance to fight. And we feel that for us, that IP, which needs a little bit of a 10-year seasoning before you achieve anything. And yes, we are now 7 years seasoned into the IP. And I would say that if the IP gets seasoned from 3 market cycles, and then you can stand on the outside and say that this is what I've created, that will be a little difficult for everybody to create. But in terms of transactional engines, I think it's going to be a mad war in the next 5 years.
Yeah. And just to add to that, I think that Amazon is investing in pretty much everything under the sun. So I'm not surprised they invested in small case. But if you look at a company like Angel, right? We look at Angel is a platform company. At the end of the day, we build a core bedrock of a platform with unique specialization in trading. We are known to provide the best-in-class trading experiences to our customers. So our strategy is we want to double down on that and really continue to raise the bar there. And naturally, as Atul mentioned earlier, there will be partnerships that will emerge. And these partnerships are going to drive the next order scale, the next order stickiness. So from a customer's perspective, they are seeing a full-on, they're seeing a full platter of options. They're seeing the full garden, not just one particular type of instrument or another. They're seeing the full palette of it, and that rainbow is what's going to make it more exciting. That's where Angel is there, as the bedrock.
Thanks, Narayan. I think with that, let me just quickly sum up. I think what everyone seems to be saying around, making businesses and wealth sustainable is partnerships, surely. Second point that came out was how, firms need to continue to focus on what they do best. And I think the third thing that came out is regardless of, what happens in the external world, I think focusing on your customer and providing them a great customer experience and an end-to-end, journey on your platforms, either by yourselves or together, seems to be, the path towards sustainability. So thank you very much for joining us today. It was a great session, and I'm sure our audience, enjoyed the session as well. Thank you so much.
Thank you, Ranjit. Thank you, Narayan. Thank you,
everybody. Thank you.
Thank you so much, everyone, for joining in. Thank you, and have a great day ahead. And thank you so much, all the audiences, to come and join in. Thank you.
Thank you.
Bye-bye.